Wind down then on this edition of The Market, and as we do that, hear it out from Ridham Desai, his top bet for 2019, which he believes is banks. He feels that earnings will boom and that the banking sector will see a double-digit growth.
Corporate banks, they're coming out of a 7-year down cycle. The balance sheets are repaired, the earnings are going to boom. They have liability franchises. The competition from NBFCs has waned and will not come back in a hurry. Credit growth, in my view, is accelerating. We're entering into a new capex cycle, and the stocks are cheap. So I think they are probably, a slew of them from the large cap to the small cap could all double in the next couple of years. Markets actually have pretty long cycles, and you don't have to make that many calls. Howard Marks has been in this business for over 50 years, and he talks about having made 6 calls. Okay, and then we all know how much money he has made, right? So if you evaluate the Indian markets from a cycle perspective, and I dare say that, I would have expected fundamentals to have improved 2 years ago, and that was our forecast, and it didn't quite work out that way because we got idiosyncratic shocks to the system in the form of demon and GST. But the fundamental cycle is pretty much at the floor. Revenue growth has already turned up, profit margins I think are going to go up, and therefore earnings growth is entering a new cycle. Now the previous cycle was a really long depressed one. We had 8 years of recurring slowdown in earnings growth, which now turns out to be the longest and the deepest earnings drawdown in India's history. And contrast that with the rest of the world, particularly the US, where earnings are at peak. Okay, so India has behaved differently. So if earnings are going to turn, my submission would be that stock prices should be okay. So far as valuations have already not priced that in. And valuations are not at the bottom of the cycle, valuations are somewhere mid-cycle. Okay, so there is some of it is in the price. So market is not oblivious that the new earnings cycle is coming and has priced some of it, but I don't think it has priced in, say, a new cycle which will last for, say, 5 years. And that is where the upside lies for investors. And then you get these opportunities like you got in October, November, when everybody panicked and stock prices fell. And I think that's where discipline comes in. And then you buy stocks. And then you stand back when that opportunity fades. And there will be another opportunity this year. I'm 100% sure. And then again there will be panic, and you will get a chance to buy the stock market. For anybody who is willing to give himself 3 to 5 years, I think we're in an up cycle, and we should make pretty good returns on stocks over the next 3 to 5 years.